Well, Corelogic did it once again. They actually downgraded their housing market forecast over the next 12 months. This is actually the second consecutive downgrade of their 12-month forecast here. So I'm going to be sharing this report with you guys in today's video, and this report was actually just released today at the time of this video. I'm also going to be sharing the cities and states that had the highest rates of appreciation in home prices compared to 1 year ago. And towards the end of this video, I'm going to be sharing the top 5 cities within the US that have the highest risk of home prices decreasing over the next 12 months, according to Corelogic here. So I have a lot to cover in today's video, so hope you guys get a lot of value out of it. Also, if you're looking for a real estate agent referral, whether you're looking to buy or sell a house anywhere in the United States, then go to homeandmoney.com/Jason to get started today. So with that said, let's go ahead and dive right into this video here. And this is according to Corelogic. This was just released on the 5th of July. Hope you guys had an awesome 4th of July, by the way. And this report here is what's called the Corelogic Home Price Insight Report. And this includes an analysis regarding home prices for May 2022 and also forecasts through May 2023. So in other words, a forecast over the next 12 months here. And this Corelogic HPI, or their home price index, is designed to provide an early indication of home price trends in the United States. And by the way, this data incorporates more than 40 years of home sale transactions for analyzing home price trends. So here's what happened in May. And home prices nationwide increased 20.2% year over year. So from May 2021 to May 2022, home prices increased by 20.2%, which is absolutely mind-blowing because historically speaking, home prices tend to increase in the range of 3 to 5% and not 20% in one single year. And home prices increased approximately 1.8% from April 2022. So month over month, home prices gained 1.8%. This is actually very close to their expectations because they were expecting for home prices to increase by 1.2% in this time frame. And here's Corelogic's housing market predictions. So they're forecasting that home prices will increase on a month over month basis by 1% from May 2022 to June 2022. So they're basically calling for an increase compared to 1 month ago, but this is a deceleration from 1.8% that we saw from April to May of this year. And on a year over year basis, they're calling for home prices to gain by 5%. This is May 2022 to May 2023. And by the way, this is the second consecutive month of downward revisions from Corelogic here on a year over year basis. And for whatever reason, Corelogic basically deletes on their website their previous housing market forecasts. But I've been following these monthly housing market forecasts from Corelogic really ever since December of last year. So here are their previous housing market forecasts. For December 2021 to December 2022, they were calling for a 3.5% year over year gain in their home price index. From January to January, they were calling for a 3.8% increase. So they actually had an upward revision. And then again, from February to February 2023, they called for a 5% gain in home prices. Then they also increase it once again for the third consecutive month here. For March 2022 to March 2023, they were calling for a 5.9% increase in home prices. Then last month, this is April 2022 to April 2023, they actually had their first downward revision in at least the last 3 forecasts. Because at that time, they were calling for a 5.6% increase in home prices. And now their latest housing market forecast, May 2022 to May 2023, are calling for a 5% gain in home prices compared to 1 year ago. And this is the second consecutive downward revision in their year over year forecast. So in any case, what do you guys think about this? They're calling for home prices to increase basically from now until the next 12 months here to increase by 5%. This, in my opinion, is a little bit bullish because we're seeing a lot of signs right now that home buying demand is decreasing. So it's going to be very interesting to see what's going to happen with home prices over the next 12 months. And by the way, I'm thinking about making a revised housing market forecast for you guys based on my own opinions. As you guys all know, I don't speculate on this channel though. I very rarely do that. So if you guys want to see a separate video with my personal housing market predictions for the remainder of the year, then please leave me a comment below. So to summarize Corelogic's housing market forecast here, they're calling for home prices to increase by 1% from May 2022 to June of this year, and also to increase by 5% from May 2022 to May 2023. Whereas over the past 12 months, home prices have increased 20.2%. So even though they're calling for home prices to increase by 5% over the next 12 months, this is still far less than the current gains of 20.2% over the last 12 months. Here's something else I also want to bring to your attention here. So here are their forecasts in red here. This is our HPI, or their home price index, over the next 12 months here. As you can see here, it's been decreasing every single month more or less. So next month, they're calling for a 1% gain in home prices. But as you can see here, after June, they're calling for their home price index to decrease basically every single month for the next 12 months. The reason why I mention this, and this is very important, because Corelogic is calling for home price gains to be moderating on a year-over-year basis. So they're calling for a positive increase in home prices compared to 1 year ago, but they're going to be moderating though. And they're also forecasting here for home price gains for the next year. So it's true that they're calling for home price gains compared to 1 year ago to basically be in positive territory. But when you look at this graphic here, look at this. On a month-over-month basis, home prices are actually decreasing. So even though their forecast calls for home prices to increase on a year-over-year basis, clearly on a month-over-month basis, home prices are forecasted to decrease. So this actually reminds me of a quote from the National Association of Realtors. If you guys follow the channel, you guys all know that I post monthly housing market forecasts according to the National Association of Realtors, right? They give us data regarding home prices, home sales, and much, much more. So here's what the National Association of Realtors said for their May's housing market update here. They said here the median home sold price for all housing types for May was basically $407,000, up 14.8% from May 2021. And here's the verbiage here that I actually do not like at all, but it says this marks 123 consecutive months of year-over-year increases, the longest running streak on record. But here's what I don't like about this comment, because this is the exact same comment they make on each of their housing market forecasts from the National Association of Realtors. So yes, home prices have gained compared to 1 year ago for 123 consecutive months. However, though, home prices have not increased on a month-over-month basis for 123 consecutive months. So in other words, home prices fluctuate on a month-over-month basis. So I really don't like them just mentioning year-over-year gains by 123 consecutive months. Anyway, when looking at this report here from Corelogic, that just reminded me of that quote from the National Association of Realtors, because they're calling for forecasted gains for the next year, but they're only calling for gains compared to 1 year ago and not on a month-over-month basis. And Corelogic went on to say the following in this report here. It says home price growth relaxed slightly in May from April, but it remained in double digits year over year for the 16th consecutive month. As in past month, all states, including the Washington, D.C., posted annual appreciation, with 13 states posting gains of more than 20%, which is absolutely mind-blowing. And it says here rising mortgage rates basically cooled home buying demand this spring and are expected to contribute to slowing price growth over the next year. So motivated buyers may have less competition and more opportunities moving forward. One thing I want to mention regarding this is that yes, if we have less home buying competition and we have more opportunities for home buyers, in other words, more houses listed for sale, that's obviously a step in the right direction though. But right now, we're not seeing any significant decreases in home prices, so buyers overall across the United States are at a disadvantage over home sellers right now. I would personally say there would be more opportunities for home buyers once home prices decrease. And according to the Deputy Chief Economist at Corelogic, Selma Help, she had this to say: slowing home price growth reflects the dampening consequence of higher mortgage rates on housing demand. Obviously, because mortgage rates have increased, basically they have doubled ever since January of this year, that obviously caused a pullback in home buying demand. It says here, we expect to see a rapid deceleration in the rate of growth over the coming year. Again, I believe that she's talking about year-over-year gains in home prices, and they also are going to be decelerating, meaning they're going to be increasing, but not increasing at the rates we had 1 year ago. And this rapid deceleration should bring about more of a balance between buyers and sellers and a healthier overall housing market. Okay, let's talk about home prices across the nation here. So nationally, home prices increased 20.2% year over year in May. And also, no states posted an annual decline in home prices. In other words, every single state had a gain in home prices compared to 1 year ago. And the states with the highest increases year over year were the following here. Florida led the pack with a 33.2% increase in home prices compared to 1 year ago, which is absolutely insane because this is basically 10 times the historical trends on a national level for home prices, which is obviously not sustainable. Tennessee, a gain of 27.4%. And look at all these states, all above 20% in home prices compared to 1 year ago. And here's a really good graphic depiction showing each state in the United States showing their year-over-year change in home prices, or at least their home price index. So in dark blue here is gains of 20% or more. Obviously Washington, Montana, Nevada, Utah, Colorado, Arizona, Texas, and et cetera, and also in the southeast. Florida, for example. In contrast, though, the states they had the least price appreciation compared to 1 year ago. But let me test my geography here. But Wyoming only had price gains in the range of 5 to 10% compared to 1 year ago. North Dakota also only had gains in that range as well. And in New York also had gains of 5 to 10%. And again, no states posted a decrease in home prices from 1 year ago, but it looks like Washington, D.C. only gained by less than 5%. So basically, home prices gained in the range of 1 to 5% or 1 to 4% in Washington, D.C. Okay, before I share the top 5 cities that are at the greatest risk of home prices decreasing over the next 12 months, here are the top 10 metros across the United States for home price gains compared to 1 year ago. So Phoenix led the pack at 28.7% in home prices gained year over year. Again, this is the home price index. Here it is, Las Vegas gaining by 28.7%. Las Vegas increasing by 26.5%. San Diego, this is pretty astonishing. San Diego, I believe the median sold price in San Diego is around $800,000 to $900,000, or maybe a little bit higher than $900,000. So for home prices, the gain by 24.5% is pretty mind-blowing because that's a big dollar amount. Los Angeles gaining by 17%. Denver increasing by 20.3%. Miami, big gains there, 24.3%. Whereas in Washington, D.C., only gaining by 10%. And in Chicago and Boston, home prices gaining by 11% from a year ago. In looking at this graphic here, even though this is only 10 cities across the United States, it just goes to show that every housing market's different, right? I always mention this to you guys. But when looking at Chicago, Washington, D.C., and Boston, compare that to basically Phoenix, you basically have almost 3 times the home price gains in Phoenix compared to these 3 cities here. All right, so according to Corelogic here are the top markets at risk of home prices decreasing over the next 12 months here. So number 1 would be in Silverdale, Washington, a very high probability of home prices decreasing over the next 12 months. And this is basically a 70% plus probability of home prices declining over the next 12 months there. That was followed by Bellingham, Washington, a very high probability as well. And then Boise City, Idaho. Also in Boise, Idaho, a very high probability of home prices decreasing there as well, followed by Tacoma, Washington, and Olympia, Washington. Really interesting to see that basically 4 out of these 5 cities are located in Washington. So just for the fun of it, I actually want to look at Boise, Idaho, because we're seeing some big pullback in home buying demand, because we're seeing a huge increase in price reductions and also huge increases in new listings and also active inventory. So real quick, let's look at the latest housing market trends for Boise, Idaho, because this is calling for, or Corelogic is calling for home prices to decrease there by a very high probability. So here's Redfin. If you actually Google Redfin housing market data, you can basically look at, I think it's around 400 plus US metros, and have a look at housing market trends compared to the past couple of years. So let's have a look at Boise, Idaho. So have a look at this because this is pretty mind-blowing. So in Boise, Idaho, new listings are up 67% compared to 1 year ago, basically going straight up ever since May of this year, which coincidentally, mortgage rates hit approximately 5% in May of this year. So basically in May, new listings were basically down 18% compared to this time in 2021, but now they're up 67%. So a huge increase basically in one single month. And because the number of new listings has basically been skyrocketing in Boise, Idaho, have a look at active listings. So back in basically February of this year, active listings were down 45% compared to 1 year ago, but now they're only down 22% from 1 year ago. So the number of active listings in Boise, Idaho is still down 22% compared to a year ago. But back in February of this year, they had 45% less houses for sale compared to the previous year. So basically going from a 45% decrease to now a 22% decrease is obviously a step in the right direction. So what I found to be very interesting is that even though they're seeing an increase of active listings, or active listings compared to a year ago have been increasing, and also they're seeing a giant increase of new listings, pending home sales have been decreasing. So right now, pending home sales are down 32.2% from 1 year ago. So it just goes to show that even though they're seeing more inventory hit in the market, pending home sales have been decreasing greatly. So in other words, more houses are being listed for sale, but the demand is not there for those houses. And you can see this pullback in home buying demand when looking at the percent of active listings with price reductions. Have a look at this. The black line here is 2022. So the most recent data we have for by week, this is by week. So the most recent data we have, this is a 4-week rolling average, is 15.9%. So multiply that by 4, that gives you 64%. So basically right now, 64% of houses listed for sale in Boise, Idaho have price reductions. In other words, more houses have price reductions than not. And when you have a giant increase of price reductions and also a giant increase of new listings and yet a pullback in contracts signed, that causes a softening in home prices. And you actually see that when looking at home sold prices in Boise, Idaho. So have a look at this. The median sold price for the 4 weeks ending May 29th of this year was $549,000. That was an 18% increase from 2021. But ever since then, the median sold price has been declining. So right now they're at $529,000, only an 11% increase from 1 year ago. So when looking at this report here from Corelogic, it really makes sense that they're calling for home prices to decrease over the next 12 months in Boise, Idaho. But what do you guys think? Comment below with your housing market forecast for Boise based on these latest housing market trends. And by the way, if you guys got any value out of this video whatsoever, then please hit the like button and greatly appreciate that. Hope you guys have an awesome day. Look forward to seeing you on the next video.